I'm Judy Shaw for NYSE Floor Talk. Joining me today is Tommy Nicholas. He is co-founder and CEO at Alloy. Tommy, wonderful to have you here on the show. Thanks for joining me on Floor Talk.
Oh, thank you so much for having me. It's great to be here.
I am looking forward to talking with you, but before we get started, a quick note to viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. All right, so Tommy, tell me about the company. Tell me who you work with and what problem are you solving?
Yeah, so what we do is we help companies that are building digital financial products make those products risk-free without impacting their users. Basically, banks and other digital companies offering products that move money have fraud risk, AML and compliance risk, and credit risk. And that's the fundamental thing they actually struggle with making products easy to use. You can think of signing up for a bank account and being asked a million questions and having to go through a million steps. That's because of fraud and compliance risk. And we build technology to help make that fade into the background so people can build more digital financial products for more people and make them easier to use.
Okay, now why is fraud such an important issue for the financial industry?
Effectively, there's a multi-layered reasons, but the basic thing is that any product that either lends or allows you to spend money of any kind is a subject of constant fraud attacks. You can steal money from any financial institution that is either giving you money or letting you move money through a variety of means. And so that basically means if you launch a product that does those things and is digital, the whole world can come after you immediately for basically your entire balance sheet. And so you need to be able to protect yourself on one hand, and on the other hand, you need to be able to protect consumers. There's regulatory obligations to protect consumers from being defrauded, or else you have a bunch of liability. And because cybercrime and all sorts of other highly funded, sophisticated fraud attacks of various kinds have grown over the last few years and also grown in their sophistication, financial organizations that offer digital products are really struggling with this problem and are starting to put the burden back on consumers in the form of high friction processes, lengthy wait times, and other things that are not good for their users.
All right, so some exciting news. You recently raised an additional $52 million with a new valuation of over $1.5 billion. What are your plans for the money?
So it's a very interesting time in tech right now, and really we did not need the money, we did not need to raise this money, but we have very large ambitions. We've recently started to cover global companies that offer financial services globally, not just in the United States, for our KYC, identity verification, AML prevention products. And that's a big lift, that's a big thing to go after. What we wanted to make sure is that we had the balance sheet so our customers could be confident that we were going to be around for the long run, which we are, and also that we could make investments when we see opportunities to go bigger, go faster without putting the balance sheet at risk. Companies are thinking about their balance sheets differently now in tech. The days of infinitely beautiful, perfect, sky-high, price to perfection valuations in the private markets are gone. I think that's a healthy thing, but we had done very well since our round last year. We had the ability to raise money at an up round, and we took the opportunity, so we could stay aggressive, so we could pad the balance sheet, and so we could, pursue our mission without having to worry too much about existential risk.
All right, well, Tommy, wonderful to have you here on the trading floor. Thanks for joining me on Floor Talk.
Thank you so much. This has been great.